Welcome, everyone. Thank you for the opportunity to speak to you today. My name is Gary R. Albrecht. I'm the founder and CEO of GPA Trading Services. I've created a very special software called the Market Price Anticipator software that truly anticipates all financial markets. Doesn't matter, again, if you want to trade stocks, futures, commodities, ETFs, bonds, you name it. It's very unique and unlike anything that's available. Now, today's topic, and before I get into the topic, a brief bio. I've been a professional trader for 20 plus years. My peers consider me a technical analysis expert. I'm the creator of a one-of-a-kind custom trading software we're going to review shortly. I founded our service, GPA Trading Services, 7 years ago in 2010. Prior to that, and along the way, I've been educating thousands of students for over the past 10 plus years. I've conducted live events, speaking engagements, platinum programs where we had globally, and one-on-one coaching and mentorships. If you haven't had a chance to peruse our website, this is our website, GPA Trading Services. We welcome you to do so. And that's me in front of my multi-monitor screen that I trade every day. Now, today's topic. How to trend trade the next big move utilizing Fibonacci's. Fibonacci's is a tool that everyone should be familiar with, and if you add certain complements to the Fibonacci's, it'll really increase your ability to trend trade those big moves as they're setting up. Now, just a brief disclaimer, I'm not going to read all this, but I will highlight a few points. First, trading is not suitable for all people. Some markets are leveraged, and therefore it's possible to lose money deposited for a position. A person should only use funds that they can afford to lose, that fits within the overall financial plan as developed by a qualified financial planner. Never risk more than 2% of your entire account balance on any one given trade. These are some of our rules. Options traders should never risk more than 5% of your entire account balance on any one given options trade. And most importantly, you should always adhere to strict, proper money management. Very critical. And all information in this presentation is for your educational purposes and should not be taken as investment advice, nor as a recommendation or endorsement to buy and sell any specific investment. Trade at your own risk. Now, let's get into the components that will add to the Fibonacci retracements extension. In order to get in a trend trade, you need to be in the direction of the trend. That's AKA trend trade. Well, there's these tools we call Fibonacci's, and you combine the retracements with the extensions, and we'll show you how magically they repeat themselves like Fibonacci numbers over and over and over, not only throughout history, and throughout the world, everything has Fibonacci ratios. And this is going to be part of the key components. Support and resistance. Everybody should be aware of support and resistance. If you're going to buy, you need to be buying from support. If you're going to sell, you need to be selling from resistance. Trend direction, critical. Because if I'm trying to trade against the trend, if I'm doing anything other than scalping it, I'm in trouble if I think I'm going to force the trend to change just because I'm in a long position and the trend is down. That's where traders get hurt. And also utilizing multiple time frames. This is going to be the key, because traders say, well, what time frame should I trade on? It depends what type of trader you are, but knowing what the higher time frame direction is important. Yes, when the monthly, the weekly, and the dailies all line up, you're definitely going to see price move higher if it's moving up or lower if it's moving down. But intraday on a 5-minute, 15, 30, sure, it can go down when the overall trend is up and vice versa. That's what you call the cycling time frames. And that brings me to my next point. Understanding how the lower time frames cycle within the higher time frames, as we like to refer to it as the line of progression. So what does it mean when you align time frames? Here's an example on an oil trade we took in our live trading class, and we had a monthly lining up in overbought territory, we had a weekly lining up, and we had a daily lining up. All you got to do is align the time frames, and then you'll notice the software gives you very specific signs and symptoms. And I'm just going to go through this briefly about aligning, and then we're going to show you how when you align those time frames and you use your extension retracement sequence, how beneficial and important this becomes. So once you're in alignment, you can see that not only did oil prices drop considerably, but it was well organized, and it stair-stepped lower and lower and lower during that period as it moved lower as they were all topping and rolling. Here's a different view of the same oil trade, and you'll notice that during the monthly turning over, the weekly had moved from overbought toward oversold. Well, our software, we give these trend triggers that are fire to tell you to go to sell and to buy, but it's based on that hook and cross pattern. And one of the points today we're going to mention is not only when we do Fibonacci extension retracement, you're going to use the hook and cross pattern. The key is to, when you're looking for a retracement, make certain the time frames are aligned, that we're going to be moving lower, or an extension once it reverses and starts its way up, you're going to look for the time frames to align heading up. Notice in all these moves, they always move in the direction of the cycles. The higher time frame cycle, price moves in that direction. Time frame cycles up, here starts to cycle up, price starts to bounce. And notice during that long-term trend, the daily repetitively, what we called slingshot it over and over and over. So I'm just going to highlight these real fast. Here's where we turned over. The daily went from overbought to oversold. And then the suggested scenario would be, in order for the weekly to continue its cycle, why would the weekly cycle all the way to oversold? Because the monthly was turning over, headed lower. And the weekly is forced to go from one extreme to the other. That's part of the hook and cross pattern. And when you have that on a higher time frame, you can anticipate what the lower time frames are going to do. In this case, this slingshot phenomenon. It's only available through our software, and it is a thing of beauty. And as you can see, it just repeats itself over and over and over. What's another way to say that? It's selling the rallies in a downtrend. Well, how do I know when it's rallying? When do I sell? You use your Fibonacci retracement, and then when it reverses based on the behavior you expect in a downtrend, you're going to sell that rally and then use the extension for your future targets. And we're going to show you that on the charts in just a moment. Here's another example that it shows it works on commodities, futures, ETFs, bonds. Doesn't matter what market you're trading. Here's the pound dollar. Same scenario. We were starting to see a monthly bottom and start reversing. The weekly was starting to reverse with the hook and cross pattern. Each time you get a hook and cross pattern, as we were seeing here, that means the daily is going to move from oversold to overbought. If you get a hook and cross, this is prior to a hook and cross on the monthly, but we just started with the hook pattern. And you can see what it forced the weekly to start doing, moving from oversold towards overbought. It repeats on all time frames. Hook and cross pattern on a weekly means the daily is going to go from oversold to overbought. Hook and cross on the daily means the 4 hour is going to go from oversold to overbought and slingshot higher and higher. So notice how it does this each and every time. Slingshot, slingshot, slingshot. And you'll hear that term a lot, but it's very important. It's about aligning the time frame. And why are slingshots important? When the slingshot's engaging, you're aligning the time frame. When you get a hook and cross pattern, the time frames are aligned. When you get the triggers that fire, the time frames are aligned depending on the type of trigger, and we'll touch on that in a moment. So as we go through the process, it started where we were oversold. The key component is being oversold, and yes, it was trying to come down, but this is the beginning of a price pattern reversal where gold went much higher. And we could see as the weekly started, monthly was oversold, weekly was oversold, starting the hook pattern, and then the daily did what we expected it to do. It's going to reverse and start going higher, as we can see there. And then the weekly not only started to turn higher, but notice, early on, prior to the daily reversing, we knew the 4 hour would slingshot lower while the daily finished its cycle. Then we had a weekly cycle up that started the new trigger and the new hook and cross pattern back to the upside. So with the system, you're able to sell the rallies in a downtrend, buy the dips in an uptrend by following the direction of the higher trend. And this is where this was a long-term downtrend that was starting to reverse in an uptrend, and how we caught it early with not only catching the initial move down, but the big reversal back up as we were lining for the next big move higher. And as you can see, it did exactly what you would expect. It reversed and went up and started to slingshot higher as the daily was turning, the weekly was turning, etc. Now let's go to the charts. I'm not sure what all traders out there are trading these days, but I have a little bit of everything. The hottest topic going is Bitcoin. Bitcoin has been on a rampage to the right. It's just been soaring higher. Well, notice, you get the hook and cross pattern, you use Fibonacci retracements. We like to call a sweet spot. A sweet spot is defined as a 38.2, a 50, and a 61.8. Some of you say, well, you don't have your 23 and you don't have some of these other ones. Why do you have these on here and not all of them? This is what I use in our classes, and I use it based on extension, retracements, and extensions. And notice early on, even as these hook and cross patterns started, what I'm going to show you today is every time you get a hook and cross pattern, the probability of going to at least a sweet spot retracement, that again being a 38, a 50, or 61.8, is extremely high probability. And it tends to rinse and repeat. And based on the sequence, if you do retrace into this area of a sweet spot, then it's going to go to a 161. If it goes further to a 78.6, it's going to go to a 127. And if it goes deeper to an 88.6 retracement, it's going to run to the 118. And these sequences continue to repeat. So you notice you had a swing point low, a swing point high, it retraced to the sweet spot. Then went on to the 161 because it reversed within that sweet spot location. If you take this back to the previous area where it reversed, you can't really see it, but it's still another sweet spot retracement. It went to the 161 before reversing and making the next stair step. You'll notice it continues to rinse and repeat. So as it went on to this next high, it went what? We got another hook and cross. On this one over here, when it did its retracement, we got a hook and a cross. So notice how the software hooks and crosses. You got a retracement. If we had this enlarged, which price is way up here now, but if we go back in time and show you this, you would see the hook and cross pattern there. It went to a beautiful sweet spot retracement, a 161 extension, and it kept going. So what's next? Well, notice, once you continue with a retracement and an extension fulfillment, then you run another copy. So what does that mean? Everybody heard of the A, B, C, D patterns? And I'm going to show you more of this in a moment. But once you get an A, B, C, and then you reach your D extension, you would start over and start with a fresh new one. So we're going up to this new high at the moment, and we're going to start with the latest low. And you continue to rinse and repeat. So what is this going to do? We're going to get Bitcoin to give us a nice big retracement once we start to get the hook and cross pattern on the higher time frame. And we're not quite there yet. We're starting to see a little bit of a hook, but without the cross. So we'll be able to use the Fibonacci retracement area for a nice pullback, then look for the extension to continue higher. And notice, as we went through the extension fulfillment, the slingshot phenomenon. Notice as I go back from where we started this original move, down low, I guess I'll just start here so we can see the visual actual movement. And we had a slingshot. It did what? It slingshotted out of the retracement and propelled it to the extension. And this is on a weekly, so we're talking weeks and weeks and weeks of time. On this, it slingshotted down or retraced down on the hook and cross pattern. And what did it do? After it reached its retracement zone, it slingshotted out of the retracement area into the projected extension. And even this most recent one, we could take from the smaller side and take this last little retracement. On Bitcoin, these little retracements are thousands of dollars, the way this has been moving. So you move it to the previous A, B, C, D. Now we have a new A, a new B. Where did the C go? Right to the extension of the retracement. And then, yes, it slingshotted out of there again one more time, rinse and repeat. And it went to the extension before it kind of pulled back a little bit, but then soared again. So you'll notice you can use these in advance to know what your targets are as you get hooks and cross patterns, and then know that the trend is still up to keep buying these slingshots higher and higher. And it's not just Bitcoin. It works on all markets. I want to call your attention to the dollar index. The dollar index had a nice big pullback for months, and we're in the midst of a big reversal on a correction to the upside. So you're going to watch this. Those of you that have seen me present before, I was telling you the dollar index was reversing to one of these destinations, and it would take several months to get up there. Well, why is that important? Because when the dollar index is getting pounded, it affects gold prices. And when the dollar index is soaring, it affects not only gold prices, but it affects currencies, it affects several markets. So it's important to understand where is dollar index headed, so we know where the euro dollar, the pound dollar, the dollar yen, most of the currency pairs with the dollar denomination with it, and then of course gold prices as well. So notice, what are we in the middle of? We had a beautiful extension retracement to the sweet spot. Anyone listening, where are we going next with the retracement extension relationship? We're in the process of stair-stepping back toward my 161, which here is right above this, basically up here at the cloud where this first B is located. Well, why do you have a second B? Well, it depends on the type of correction. We teach Elliott wave, we teach a lot of things. And no matter what you use, if you start to use the trend momentum in the PAI, you would ask, this looks just like a common indicator. Well, it's not. The trend momentum has built-in volume that's calculated in the background. This also has the ebb and flow of the market we call the price action indicator. It tells when buyers are in the markets buying, when they're selling. When the green line money flow is down, markets go down. When green line money flow is up, markets go up. And it's simply that easy. And it built in all of this for you. So the key was, how do I use Fibonacci's to get into a longer term trend? By using the retracement extension relationship and using the software to tell you when a particular move is over. So this is the beginning of a stair step higher. Watch in the coming weeks and months where it's headed. It's going to go at least to this area, maybe higher. But we're going to follow that line of progression. This weekly that was engaging over starting to turn out. What does that mean? Guaranteed price is going to stair step over here, not just straight up, but it's going to go to the swing point high. I'm going to show you several more examples of this. But watch in the coming days and weeks as we go to what target? Up here toward my cloud. So whether I use Ichimoku, I use Elliott wave, I use price patterns, I use candlestick pattern, no matter what you're using, this system will help increase its efficiency and overall effectiveness by simply following the cycles. And as the time frames align, that's your highest probability entries. And with the extension retracements, now you have entries, exits, takes profits. We go so far as to part of the software has profit triggers. So it'll tell you and automatically take those profits when they fire based on our trade management system. So as we continue to watch, this is going to go higher. What's that going to do to a lot of currency pairs? It's going to make the euro dollar continue to go lower. And I've been talking about this for weeks, and I'm going to pick up with the dollar yen right now. We knew the dollar yen is going to strengthen. When the dollar index strengthens, the dollar yen tends to go higher. When the dollar index weakens, the dollar yen tends to go lower. And we're in the midst of a huge Fibonacci retracement extension relationship. We went from the swing point low, and you notice the indicators turned, hooked, crossed, went up. We can do the same scenario as it was going down in these little Fibonacci retracements. Along the way, it reached retracement extension, and it kept going. Well, now here's the monthly cycling and starting this down cycle, which most recently started back up. So we're able to trade thousands of pips up, thousands of pips down, and I'm going to give you a treat. This treat is to tell you the dollar yen in the coming years, not just days and months, but we have a target of an extension of a 38.2, 50, or 61.8 retracement. It means we're going to start to stair step towards what? My 161, which is up here at 154. Those of you that trade Forex, 23, 33, 43, 53, that's 4,100 pips to get to this extension. And notice my monthly is starting to turn up. And each week, my weekly is starting to do what? It's supposed to move from oversold, overbought. And let me extend this view. And since it's been doing, it's been slingshotting, slingshotting, slingshotting. It's starting that retracement is over and starting a brand new extension retracement. Well, someone would ask, well, does it only work on all time frame? No, the extension retracement extension relationship works on all time frame. But when your time frames are aligned on the higher time frame, you're talking hundreds to thousands of pips, versus if I did this on a 1 minute, it would be 5 to 10, maybe 15, 20 pips. Much smaller moves on a lower time frame, but yes, it works on all time frame. And notice the behavior. What did we get? We got a monthly that started to turn and hook early on, prices moving up. Yes, it tried to reverse as my weekly pulled us back down, but once it reversed again, we keep buying the slingshots and buying weekly reversals. So what's it going to do in the coming day? It's going to continue to slingshot higher. Why? Because the monthly is up. And it's going to continue to do so to where? All the way to 154. Admittedly, it's going to take probably another year to two to get up there, but it's still going to go. Well, I'm going to throw this out at you. Everyone should be long the pound yen because the dollar is at a positive interest rate, the yen is at a negative interest rate, and as the Fed over the coming years, while this rallies, it's going to raise interest rates, which means the differential is going to be higher, which means it's a carry trade. And you're going to get the differential increments every day as this increases over time, but you get deposits from your broker while you're long just an interest payment, and then you capitalize that interest payments every day for years, combined with thousands of pips, it's going much higher. I guarantee, as Justin Wilson would say, for those of you or Cajun enthusiasts, this will continue to slingshot in the coming weeks and months. Well, Gary, what happens when the monthly turns over? The monthly can slingshot lower and the monthly can slingshot higher. We're projecting not only is the monthly going to finish this cycle, as I said many months ago, it was going to go all the way to overbought, but then when it turns over, it's going to start to slingshot higher and higher as we run on to this 154 target. Well, just in case you're interested, here's a couple of actual trades, which I'm going to show you a screenshot of. But these are the ones I showed several weeks back, and we were only up on the pound odd a few hundred pips. Well, now we're up 1,700 pips. If the markets were over, you can see trade in progress. It's still a live trade. If the markets were open today, you would see the tick data and price would be moving. You'd see how many pips, et cetera, were up. But I have a screenshot I just took before the markets closed on Friday to show you that. And notice the same scenario. We're in the midst of a monthly hook and cross pattern. Why is that important? Because when you get a monthly hook and cross pattern, not only is it going to go at least to the Fibonacci sweet spot area, which we see here, I think it's going to go much higher, but we're in the process of moving toward this sweet spot. Swing point high, swing point low, and this little box here represents my sweet spot, 38, 50, and 61.8. Well, weeks ago when we got in this trade, I told everyone, you want to get in now. We got in live in our class, and I said it was going way higher. Notice here where it engaged down and failed, which I showed you on the dollar index, it went on to reach the previous high and make a new high. Well, weeks ago, if you saw me present, it was way down here, only hundreds of pips up. Now we're 1,700, and I even told you then, I guarantee it's going to this swing point and higher, and it's headed to this area minimum. Well, as long as my monthly is up, we'll continue to do what? We're going to continue to expect the weekly would go from overbought toward oversold, and guess what's next? We're going to get a little retracement to another extension fulfillment. So in the coming days and weeks, we'll get a little bit of a retracement as this turns over. Then it's going to start to slingshot higher and higher. Why? Because the monthly is up. So you see how easy this is? All you got to do is look for the trend momentum and the PAI to be in the same direction. And if it's up on a monthly, the weekly will continue to slingshot higher once it gets to overbought. Well, notice the weekly. The weekly went from oversold to overbought. This is why we got in this trade. It was the weekly reversal. We entered on the daily. So by moving from oversold to overbought, what do you think the daily's been doing for us? We're able to get in this move since it reversed. We were able to buy the slingshot, 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 over and over and over and over as it continues to stair step. Now you ask, I know this in advance because it's reversing against a monthly that is up. It's reversing on a daily with the weekly up. So it's going to force this daily to keep slingshotting over and over and over. And every time you reach a slingshot that's engaging, the lower time frames are in agreement. Every time I get a hook or cross pattern, it means the lower time frame is going to go from one extreme to the other. So what that means is when I have a weekly starting that hook and cross, why I told everyone and we got in live in our trading class was that this was going to move thousands of pips. We're up 1,700, and it's going to go thousands more before it's over with because it's stair-stepping. Here's another one that's in progress, the pound CAD. We started off, we were only up a couple of hundred pips. Now we're up over 500 and counting, and it's going to continue to stair-step. Why? Well, oil prices are in for a major reversal coming soon, and when oil prices go down, the CAD weakens, and the pound CAD is going to go much higher. How do I know that if I'm not aware of the relationship of oil, etc.? Because the monthly is up. And what did the pound CAD do? And it's continuing to do. You see this slingshot down that failed? We call that a price pattern reversal, a high, a low, a lower high. This will go on to make a higher high, just like I showed you on the pound odd. And we talked about it weeks in advance before it got there. Well, I'm telling you now, we're still working our way up, and we have several hundred more pips to get to this swing point high of 78.52. We have another 600 pips to go. So, and then some. And the monthly's still up. So what's going to be the strategy in the coming weeks? When the weekly finally finishes its cycle, we're going to buy the weekly slingshot. But while the weekly and the monthly are still up, guess what you do? You buy daily slingshot after daily slingshot after daily slingshot after daily slingshot and allow it to keep stair-stepping. All right? Let's keep going. This could be stocks, futures, commodities, ETFs. Everybody loves the Russell. The same hook and cross pattern where it hooks and crosses gives you the sweet spot retracement. And because we're in an uptrend on the Russell, Dow, the S&P, you continue to look for extension, retracement, fulfillment, extension, retracement, fulfillment. And we're just about, hint, those watching the Russell, we're due for another new retracement before the next extension up. We're in the process of, on a weekly, getting a retracement. As it's starting to turn, you can see the latest thing slingshotted higher. Now it's starting to turn. Why do I think we're going to get a deeper retracement? Not just because I see a red candle. I told our students live in class this week, look for this to start moving lower as it retraces. And my monthly is deeply overbought, starting to give us a slight hook. So you run the swing point low to swing point high and look for it to retrace to this area. It's almost reached it now, but it has further to go. And if the monthly ends up giving us a hook and a cross, then you can take your extension or beginning of your swing point low with the last time we were oversold and look for this to go much deeper. So I draw these boxes for visual targets. So if we get a hook and cross on the monthly, then we're going to look for it to go this low. If we don't, and we're simply going to get the hook and cross on the weekly, then we're going to look from the weekly perspective and say that we're going to be looking for these targets in this area. Here's another target zone, and it gives me 6 different targets to shoot for. Sometimes there's an overlap, and then the last swing point is the current one, which we're just about to get to our sweet spot. You have 3 different targets. Why is this important? It's the same retracement, extension, fulfillment, but what's the difference? Why do we think we're going to the higher one first before we go to the middle one or the last one? It's about the hook and cross pattern. We have a hook and cross pattern on the daily. So we're going to go, in which we already have reached. Check this out. It's like rinse and repeat. It's phenomenal. When I go from that swing point high to swing point low, where are we? We're in the midst of the sweet spot. Well, Gary, I thought you said it was going to go deeper. It is. But this is just to show you that on a daily, when it first hooked and crossed, I had this target zone to start with. It went right to it. And the bias is because the weekly's turning, that this daily is going to continue to move from overbought toward oversold. And again, if the weekly can continue to do the hook and the cross pattern, then the daily will absolutely continue to finish its cycle down. So you're going to keep selling rallies in a downtrend while the Russell, in this case, retraces. And then the big picture is we're going to buy the next big weekly slingshot back up once that retracement is over. Every time we get these retracements, slingshot higher, retracement, slingshot higher, retracement, slingshot higher, retracement, slingshot higher. It's like magic. And again, whether you trade bonds, here's another treat for you. Bonds is in a long-term A, B, C, D trend. And we're in the process of going down to 126 long-term. What do you mean by long-term? When the Fed starts raising rates, bond prices are going to go lower. And we already have the A, the B, and the C is almost for sure, not 100%. It's possible it could go a little bit higher before the D starts. But based on the line and the projection right now, we're expecting this to stair-step lower. Regardless if we go a little higher first, then down, I follow the cycles. And yes, my monthly is oversold, but look at what it's doing. It's turning and engaging back down. Money flow is still down, as we've been calling this stair-stepping lower. My weekly is in the process that was engaging up, is turning back over. So look for this to continue to stair-step lower. Eventually, we're going to break the B, and once we break the B, it's just a matter of time. We reach a 118, a 127, and a 161. Watch over the coming years, because again, it's going to take a while for the Fed to raise rates. But big picture, you're talking 20, 30-point moves coming on bonds. Anybody trade bonds? You can make $1,056 on one contract to move 1 point. Do the math when it's going to move 25 to 30 points, stair-steppingly, but in the coming weeks and months and probably year plus as they raise rates. Well, what's the good news? The good news is all I do every day, whether I'm a scalper or a day trader, and I go through this in our live classes. Well, the big picture may be down, but can I buy these hooks and cross patterns back up? You betcha. It's like clockwork. Just like when we had this reversal and we did the same thing. I said, watch for bonds to make a retracement. Even if it decides to go higher, it's still going to go to the sweet spot when you get a hook and cross pattern. And the same thing with this hook and cross pattern for the upside. Well, we turned over and we got a swing point high, a swing point low. It should at least go to the sweet spot. Well, because the higher time frame was still up, it went a little bit further, but it still goes to those numbers. Repeats over and over with the simple hook and cross pattern. So what's the bias long term? I follow the cycles. My daily is in process of engaging and disengaging. Anybody knows what that, remember what that says? That we're likely to see this stair step back down to this low. Just like the pound CAD, pound odd I showed you, when it engaged and disengaged back up, it rallied to the previous high. It works in the down way the same. It engaged up, it failed, you got a high, you got a low, you got a lower high, and it's reversing, turning over. So watch in the coming days as bond price stair step down toward this previous low and makes a new low. Then you'll get cycles back up and you can scalp it up and keep selling this longer term downtrend by selling weekly slingshots. Once the weekly finishes its cycle, in the coming months and years, you're going to get a bunch of weekly slingshots lower and lower as we break the B wave or the bottom and go on to produce our D over here at 161.8. All right, and let's go to stocks. It works on everything. Stocks. Amgen was one when during this downtrend we got the hook and cross pattern. I said look for it to go to a deeper style. You see the maroon line or magenta? It went right to the sweet spot and it's bouncing. And then what I said based on the weekly is trying to turn up, but it's turning up against a monthly that is turning down. So this scenario means that yes, you can trade it both directions, but you follow the cycle. This weekly engaging up is going to fail. It's going to turn and hook out, and we're going to go back and make a new low as we head back toward that previous swing point. So what I was telling our students, simply stated, well, can I buy Amgen on a daily hook and cross? I said, yes, here's your target. It's absolutely going to rally at least between this 175, 179, and 182 before it's going to reverse and go lower. The daily's doing exactly what we expected it to do, to start to turn over and move back lower. And it's going to continue in the coming days, stair-stepping. And as it does, the weekly is going to turn and hook out. And then the monthly is going to continue to force this lower as we go deeper into the sweet spot. But it's all about the cycles. So as a day trader, I heard people talk, well, we got a great system for day trading. Nothing better for day traders than the hook and cross pattern. The other week, I was telling everyone a few weeks back, I said, Tevez been on a downtrend. What's slingshotting lower and lower and lower? And it's likely to probably slingshot lower first, but I told everyone it's guaranteed to go to this sweet spot. Why? We got a hook and cross pattern. Look at what Tevez been doing after being beaten down. It's going right to this. And if you saw me present this weeks ago, you would see that this is the exact target frame I gave you, and there's my little box. And it's going to continue to stair step. My weeklies are up. There's no way it can go and make new lows without the weekly slingshotting back over or reversing over. So while my weekly is up, what is the daily going to do for us? It's going to, come on everyone, slingshot higher. How cool is that? On cue. Weekly up, daily slingshots when it gets to overbought. Along the way, the daily can try to engage down against a weekly up. It's going to fail, and when it does fail, it goes back to previous high, makes a new high. And if it doesn't, and it turns over here, it's going to slingshot higher. So watch Tevez, as bad as it's been beat up and it's hated, it still went $6 and counting. Would you have loved to have been in a $6 trade on a $10 stock? Imagine. And I told everyone it's going to take weeks to get up there. Why? Because the weekly is the one turning. That's why it's going to take multiple weeks. So you do a little option play, you have several thousand shares on a few weeks option, a couple of month option. As we said, it would take weeks, and my students are very, very happy with the results. All right, so as we're finishing up, since we're running a little bit behind the previous presenter, let's give you more of the trading results. Here's gold. We're not talking minimal moves on gold, $126 move up because the PAI hooked and crossed, and we had the rally to the upside. Gold to the downside, not only do you get triggers, but you get the hook and cross pattern, $150 move. These are substantial, $30,000 trades simply on watching the time frames align and getting in the direction of the trend. What I don't have time to discuss is this trade management system can automatically be input data to tell it to sell the rallies in the downtrend or buy the dips in an uptrend. And those hook and cross patterns, when you have sweet spot 38.50 and 61.8, you can set your take profit 1, 2, and 3 at those levels and let the system take care of itself. It reaches take profit 1, it moves your stop loss into profit, and it'll run until then, or you can take profits along the way with the profit triggers. Those are these colored triggers there. And you notice it gives you during reversals. That's what the profit triggers mean, so it automatically take your profit even though you were not at your computer, because it does it automatically. And let's continue. 8,600 pips from one of our students on multiple trades that we're setting up through our scanner system that told him all these trades were setting up. He continued to let it run, went on to 18,300 on those same trades because the larger time frames were in agreement. Here's gold again, 1,262. Pips, 126 plus. Pound odd. This is awesome. This is where the time frame started to align. Started with 778. The monthly and the weekly were still down and went on to grow to 1,274. Well, we weren't stopping. I said, keep going because the time frames are still aligned. Slingshotting lower and lower. So what did it move on to? 2270, 2,270 pips. Well, we weren't stopping there because the monthly and the weekly were still aligned, and you can see it kept slingshotting and went up to 3,027 pips. Here's the pound CAD. We don't trade small items. We make massive moves. 3,073 pips. Those of you that trade Forex, if you're trading one standard lot, that's a $30,000 trade. Yes, it took some months for this trade to play out, but that's okay. Who cares, right? Pound yen, 3,200 pips, and it goes on and on. Here's a extension retracement built-in system that you do breaks on highs and lows. We call that a breakout trade built into the system. It automatically entered the trade. Here's 272 pips. Pound CAD current live trade. This is the one I showed you a moment ago. Here's the screenshot. We're up 523 pips. That's the live trade. Here's the pound odd I showed you. This one's still running. It will be looking like this when the markets reopen. 1,735 pips and counting, currently live. Now, why should you use this system for options trader? One of our students was an option trader. He basically started using our system. He said he made $1,200, $300, where he normally would have bailed out for a loss, and he's now canceling his financial advisor and several newsletters and opening up multiple more accounts, including Forex, because of this system. He's been with us for multiple years. What do you get with the program? You get the software and the live trading classes. And what's included in the software, you didn't even touch on today, a scanner. We have the Slice of Heaven Finder scanner. These two get you in the big trend trades. The slingshot trade triggers we briefly showed you. Trade management system you saw momentarily, that's both instantaneous. I can enter on the spot, or I can let it enter on its own in advance, set it and forget it, and it does the rest. Scalping systems, we have a few of those to choose from. Breakout system, I basically showed you. Bracket, top 10 reasons, automatically calculates support and resistance, automatically identifies the trend of each time frame, automatically monitors and tracks your time frame cycles. It provides consistent entry, exits, and take profit level based on the trigger, slingshots, hook and cross pattern, profit triggers. You can use it, like I said, automatically in advance to do your entry based on buying slingshots in an uptrend or selling triggers in a downtrend, whatever. And you can instantaneously enter your trade if you see a setup right now, and then it'll enter and manage it from entry to exit. Dual scanners, it fits any trading style. So whether you're a scalper, day trader, investment trader, I personally will pound you into submission to get you to move toward the longer time frame because you see the results. But scalping is a scalping's heaven. Dual scanners for the next big trade, works on 800 plus symbols, stocks, forex, futures, ETFs, commodities. It consistently delivers low risk, high reward, high probability trades. And here's the nut and bolts of today. We normally don't offer a monthly plan. Rarely do we do, but in the past we have offered it for $3.99. Today we're going to offer it for $2.97. And because it's the holidays, we're going to give you a holiday added bonus. Sign up under authorized.net and we'll give you a second month as a gift to you. So you'll receive 2 months of our service for the price of one. And how do you order? You order via this link, gpatrading.com/amember/sign up, monthly $2.97. It's been posted in the chat dialogue for you. And what does it look like? The authorized.net. Here's what the order form looks like. You'll get the $2.97 per month, but as soon as you sign up on the authorized.net, we'll extend so your next rebill will not be due until February the 9th of 2018. So for $297, we'll get you into some of these trades that are ongoing and numerous others I couldn't touch on today that are setting up as we speak. And all you need is one of those to make your investment back and then some. And in closing, we have students that have been with us for many, many years, not just weeks and months, but decades and counting. So most of our students have been with us for many years. So I want to thank you for attending the webinar. We look forward to you joining us. If you have any questions, please send us support@gpatrading.com. And in closing, as far as the name of the software, Market Price Anticipator software empowers you to read, anticipate price in any financial market, on time, in time, all the time. And as a representative, we have 117 countries and counting. We have members from all over the world, and we'd love to have you join us as well. Thank you for inviting us today, and audience, thank you for giving me a moment to present. Y'all have a good day.